Hello, everyone, and welcome to another episode of CryptoScam. And this one is going to be a little bit different. We're going to take a slight break from talking about tokens and cryptocurrencies. And I am being joined today by Andy Hoffman of Miles Franklin. And the topic today will be manipulation. He is, I consider him an expert in precious metals manipulation, and we will look to tie that into cryptocurrencies and Bitcoin, and we'll see what the Bitcoin industry has to look forward to or what to watch out for. So go ahead, Andy. You give a brief intro and tell people a little bit about yourself.
Yes, and it's a pleasure to have a podcast with you, especially two fellow New Yorkers. I don't usually even travel to New York anymore, let alone have business dealings with New Yorkers, so I'm thrilled. My background is, yes, I was born and bred in New York. I was a chartered financial analyst, worked 16 years on Wall Street. I was a bond trader at Cantor Fitzgerald, and I was a trader and analyst at a buy-side hedge fund. And then I spent 7 years as a sell-side oil field service drilling and equipment analyst, the last 6 with Solomon Smith Barney in New York, which ended in 2005. Now, in 2002, I got wind of the precious metal story, and I went all in on the sector. So I'm going to be hitting my 15-year anniversary in precious metals in a couple of months now. Maybe a month or two later, I found GATA, the Gold Antitrust Action Committee website. Basically, they're still around now. They've been around since 1999, talking every day about the precious metal market, specifically the manipulation, or I should say the suppression of prices that has caused, well, so many of the problems in the world and certainly kept the price of gold and silver down. And I became a regular commentator on that site back in probably 2003 or 4. Back then, actually, I was called Ranting Andy. So some people who don't know me might be able to Google that and see that that was my name for a time. When I left Wall Street, 2 years later in 2007, I joined the mining industry in investor relations. I figured I was bullish on that sector, and I used my Wall Street skills to go in the mining sector. So from 2007 until 2011, I worked for a variety of companies in investor relations, corporate development. And I became increasingly more popular in the space in blogging, just blogging for free for GATA, and eventually for one of my companies, they let me do a blog. And in time, the manipulation in the mining sector, as well as the precious metal price itself, became so bad that I just said I had no interest in this anymore. And I luckily found my way into Miles Franklin Precious Metals in October of 2011. They have been around 28 years. We are a precious metal bullion dealer, and I've been their head of marketing for the past 5.5 years, at which point I've been blogging and writing every single day for free about everything from the financial markets, the politics that affect them, and even lately, very much so, cryptocurrency and the relationship between precious metals and cryptocurrency, given my views that they are, as I called them in an article a year ago, the dual destroyers of the Fiat regime. And so I came across you through following the Bitcoin space and through some mutual friends that we have in the space. And in fact, we found each other because you criticized an article when I said that gold was manipulated. So here we are today to talk about it.
Yeah, no, that's great. Thanks for that background. And I have heard of you as well. I've seen you on other podcasts like Greg Hunter, and I have heard of your work in the past as well. And it's interesting, we have a very similar background, not only New York and Wall Street, but you worked in the mining industry, and I have my original bachelor's degrees in geology. So I come from that side of things as well. And it's also very interesting that you and I slightly disagree on the precious metal manipulation, and we'll get to that later in this podcast. All right. So the first thing I would like you to go through briefly, if possible, though this will be difficult, is the following. And you wrote this to me in an email, and I would like you to briefly elaborate on the history of gold, and I will read your statement verbatim from the email. The gold trend has been up for 46 years when the previous overt 38-year manipulations ended in 1933, 1968, and finally 1971. Plus, gold is far stronger in the 180 non-reserve currencies, which are manipulated less.
Right.
And it's been manipulated every day for 45 years. We'll get to that part later. But can you just talk briefly, because I know a lot of the cryptocurrency people are young, and I like to make fun of them for being 13, but that's not all that much of a joke. 13 and 14-year-olds have reached out to me on like social media asking me questions about trading and stuff, and then they inform me that they're only 13 or 14. So a lot of so some of my viewers may not be very familiar with the history of gold, obviously. So can you just maybe walk us through like the last 100 years? And I know it's hard to do this quickly, but give it your best shot.
Well, look, thanks to technology, people who are 13 years old now can be vastly more intelligent than they were even a decade ago, especially when it comes to monetary matters. And you know, frankly, cryptocurrency is the perfect topic for someone who's young to get into. I mean, it makes sense on a lot of levels. And frankly, I think a lot of the 13-year-olds of today are not going to be using fiat currency 20 years from now. So it's smart that they are getting into it. Now, as for gold, I mean, not only has it's kind of been de-emphasized by society, but it's been, as I've said, suppressed and propagandized for so long because it's the enemy of fiat currency that most people have not a clue that you could even invest in it, let alone that it's anything more than a, quote, barbarous relic. You say, what's the history of gold for 100 years? Look, you can go back 1,000 years. You can go back 5,000 years. As long as there's been man, as long as gold's been around, it's been the preeminent store of value. It's been used as currency specifically, and it's more importantly been used as a store of value. And going forward, I think it's going to be used 100% as a store of value because I think there are going to be other options as money. There have been gold standards throughout history, and every time we've had one, the prices, consumer prices, have been stable, including in the United States up until the 1940s. The problem is that, like fiat currency standards, they are always abused and destroyed. The perfect case being here. We tried to hold the price down at $20 an ounce, and then it was confiscated and revalued. And then we had the Bretton Woods Agreement in the 1940s, where gold was made the reserve currency to the world, until we reneged on that agreement in 1971. And to this day, you could say it's a fiat currency standard, but people still believe, central bankers who own gold still believe that it's based in some way by holdings of real assets like the 8,134 tons that Fort Knox supposedly holds, but it doesn't. I mean, it's been proven, it's been admitted, and you just do the math to know that the gold isn't there. So look, gold has been held down to promulgate all of these fiat currency standards throughout history, because every time you have one, they get overprinted, and gold is kind of like the barometer, the canary in the coal mine. So they try to hold the price down. The things I was talking about in that email, there are overt and there are covert ways of holding it down. The London Gold Pool, which lasted from 1961 to 1968, was led by the U.S. government, and the goal was to hold the price of gold at $35 an ounce. That was an overt manipulation. But after 7 years, it fell apart because there was just too much demand pressure, and it pushed the price up, and they had to abandon it.
So what specifically happened in 68? I'm not familiar with, I'm aware of what happened in 1933, and I'm aware of what happened in 1971. I'm not very familiar with what happened in 1968. So maybe you can shed a little bit of light on that.
Yeah, well, again, as part of the Bretton Woods Agreement in the 1940s, gold was made the basis. A dollar was $35 an ounce, and all the other currencies were fixed at prices relative to the dollar. But if the price of gold went up, then it would mess around with all those fixed prices. So they all got together in 1961. They called it the London Gold Pool because it was centered in London, but the leader was the United States government, as it is with everything, whether it's NATO or the IMF. It's always the United States who has the biggest vote. And every day they said, we're going to sell our gold to make sure it's $35. But the problem is, in the 1960s, you had this big inflationary surge caused by, well, for instance, the guns and butter policies of Lyndon Johnson, and that's what caused inflation to surge to the point where foreign governments were buying gold so much that they couldn't hold the price anymore, and they said, we're just going to abandon this peg. And then 3 years later, Nixon, under that same pressure as those inflationary pressures kept going up, and particularly France, Charles de Gaulle was trying to exchange all of his francs for gold. He just said, you know what, for now on, gold isn't even convertible anymore to other currencies. We're just going to keep it ourselves. The problem is we've spent those past 4.5 decades since covertly selling off, swapping, leasing the gold, naked shorting it, doing all kinds of things, encumbering it otherwise, to make sure that the dollar doesn't crash in value. And here we are 4 decades later, and look at the mess it's made. I mean, look at the progression of debt since 1971, the progression of the cost of living since 1971, and here we are at a point in the world where fiat currencies around the world are crashing serially. And that's what I said by...
I definitely agree with you that what the U.S. was doing with other people's gold is bad. There should have been better rules and regulations that they shouldn't have been able to just play with another country's gold, like what happened with Germany. When Germany requested all of their gold back, I think they got maybe 5% back recently. So I think that's very bad and very disgraceful on that front. So we definitely agree. Just one more question about the 1933 confiscation of gold. I know what Roosevelt did to try and confiscate gold, but the way I read it, and it's been explained to me in other writings that I've written, he never actually went after any individuals. Like, no individual was ever in real danger. That policy was more to take away the gold from the banks. Now, granted, the banks were maybe a little more private back then than they are today. They're more of in cahoots with the government, but that wasn't like an attack on the people. The people were still able to hold on to their gold. He didn't go door to door, but he was able to use it to confiscate it from the banks. What do you think of that, of those statements?
Well, two things. One, as far as the timing of talking about their repatriation, because yes, it was 3 or 4 years ago where they requested, a couple of 100 tons of gold, which if the Fed really had it, they should have sent it back in a week. And yet they said it'll take 7 years. And finally, I think they had given, as of last year, like 10% of it. And then miraculously, just a couple of days ago, Germany said, yep, we just got it all. The problem is that the gold that they got is not the same gold that they gave based on the serial number. So clearly the Fed never had their gold. And if you want to ask, I'm not conspiratorial, but I have a feeling that given that all that's going on in Europe, the German government came to us and said, look, you better give us gold back. I don't care what serial numbers there are. We want it now. And that's so. But anyway, all the credibility has been gone. The fact that it took 3 years to get the gold, this small amount of gold, and it's not even the same gold that they asked for, just shows you that clearly the Fed doesn't have what it says it has, certainly relating to other people's money. And what happened in 1933? Look, we were on a gold standard, very successful gold standard for, 50 years. In fact, you had made the comment that gold lost its use case when the metal detector was invented. Well, the metal detector was invented in 1881, and gold did just fine through that gold standard. The problem is that because of what happens when you have a gold standard is that it limits the amount of money that the government can print. And we were in the midst of this horrible depression in the early 1930s. So what was going on in the country back then, remember, a dollar was gold backed. It actually said on the dollar, redeemable at your bank for $20.67 worth of gold. So, and back then people trusted our government. So what happened was in the early 30s, I think it was Hoover was the president, he said to people, look, people, we need gold because we can't print money without your gold. If you give us your gold, we'll give you its fixed value of $20.67. Of course, you can always get it back. It's a patriotic thing to do. So people did that in mass in the early 1930s, knowing full well that the dollars they received back said redeemable for gold. The problem was that FDR, the first act that he did when he came into office in 1933 is he reneged on that promise and said, first of all, people, you can't have your gold back. It's no longer allowed to be owned by the public. Second of all, you have to give it to us. And third of all, we're going to revalue it after you give it to us from $20.67 up to $35. So they kind of screwed you in many ways. But like you said, no, they didn't go door to door because, first of all, a lot of people had already given back their gold under false pretenses years back, and the people that still had it, well, they just kept it because, I mean, how are you going to enforce that? So no, it wasn't hostile. They never went door to door, but the fact was they made it illegal, and therefore, if you wanted to trade it, you had to do it on the black market. So that's what happened back then. I don't think there's any chance that could happen now because it's a global market, and first of all, the amount of gold held by the public, people like me, is immaterial compared to the monstrous debt that we have. So unless they're going to revalue it, and I mean it would have to be like the market would be revalue it, not the United States government, it's not even going to be worth even considering. But I do believe that you're going to have a fiat currency crisis here, as we've been having in multiple currencies around the world, including some of the major currencies like the euro. And when we do, well, it's going to be an interesting time because I believe there's going to be some new draconian government actions, which is why you need to protect your assets as best you can.
Yeah, no, and I do agree with you there as well. And I'm very cautious with my Bitcoin, and we'll get to Bitcoin later, in that I can definitely see similar draconian laws where using or holding Bitcoin, or if you get caught with Bitcoin, you could be in serious legal trouble. Briefly to mention my metal detector view, even though I've learned from you just today that the metal detector was invented in the 1800s, but it wasn't really utilized until the mid-1900s, and it was kind of used to keep us safe on airplanes as its primary purpose. But I feel that in today's society, because the government is worried about people moving their wealth around the world, the metal detector is being used to make sure you don't smuggle gold out of your country. I mean, India is being pretty notorious at this practice now. And I think the use of the metal detector when it comes to finding your gold has removed one of its greatest use cases that it's had for thousands of years, which is taking your savings and leaving your area of where you live. Basically, if you want to move, if you want to leave Europe to come to the promised land of America, like they did hundreds of years ago, it was much easier to take your gold with you, and it's much more difficult today because of technology. And this is where Bitcoin, I think, serves a great use case. But we'll get to this a little bit later, unless you want to comment real quick.
Let me just add to that point, though, not talking about Bitcoin. When what you're talking about now, like I wrote an article 5 years ago, and everyone could Google everything. It's up on the internet. It's called Priceless Precious Metals versus Worthless Dollars. So basically what it's saying, it's whenever someone says a what if question to me, like, what if they confiscate it? What if they windfall tax it? That kind of stuff. And my answer is that, look, governments don't do things proactively. They only react to a crisis. So if the currencies are crashing around the world, let's say the dollar is actually crashing in purchasing power value, and they go to such lengths that they're actually looking for gold, probably whether you have gold or not is going to be the least of your worries. So look, so when you hold gold or Bitcoin or anything that you're trying to preserve your value, you are assuming some kind of semblance of civility in the world. Now we have options in gold. You can store it. First of all, you can store it at home in ways that will protect you from the metal detector. But you can also, we have options for storing it. We store with Brinks in Canada. We could store it with, in Switzerland. There's all kinds of things. But the point is, all of these options are undertaken under the assumption of a normal world. If you're talking about a world where the supposedly most civil government in the world, the United States, is going door to door with metal detectors, trying to, do like a police state, like in India, well, then, all bets are off. But yes, when it comes to storage, nothing is going to beat Bitcoin as for security, but it's not like every dollar and yen and euro in the world is going to be stored in Bitcoin. And, there's multiple ways of diversifying. And I think with the currency crises that we're seeing now and what we're going to see, when you're talking about 7 billion people in the world, they're going to be looking for multiple outlets to store wealth. And there's going to be the good old-fashioned way, and there's going to be the good new-fashioned way. But there's definitely not going to be one asset that everyone holds everything in.
Right. Okay. So let's No, and when I say the metal detector, I don't literally mean that they'll go door to door with the metal detector, but it's more like a pseudonym that because gold is physical, it's a different attack vector versus something like Bitcoin, which is always virtual.
Right, but then again, you have
Right.
stocks and bonds where the government could just erase all of Charles Schwab's accounts. So again, there's a degree of
Oh, I
risk
agree.
in absolutely everything you own, and you have to gauge those risks and diversify. And so each asset class has to be considered as such.
Well, I agree, though I think that that's a much smaller attack vector. I don't think the stock market is going anywhere. I mean, if anything, the government might force your 401k. They might take control of your 401k and invest it for you for safety reasons. And I'm a little worried about that, which is why I'm looking into getting my 401k somehow into my own personal control, or just withdrawing it and paying the fee for withdrawing early.
Which
But
is exactly what I did in 2009. I was 39 years old. I cashed it out, paid my 10% penalty and the taxes, which I know will be going up in time, and liberated my money. And I recommend that for everybody.
Well, I actually have a slight advantage at the moment because I've been unemployed for 2 years, being a broke podcaster. I started withdrawing my 401k, and
Yes.
hopefully my accountant will be able to claim hardship for me to avoid that 10% penalty, because I haven't had any, and this is all legal because I've had no
Yes, I
income
know.
at all. I've actually been using my 401k money to pay my rent and mortgage and
Yes.
bills. So I'll see if I can get out of that 10% penalty.
Yes, I'm well aware, because we get people all the time who want precious metal IRAs, and they say, well, I have a 401k. And I say, well, you either got to quit, get fired, or be able to claim hardship. So I'm going to say to you, good luck claiming hardship. But look, if you're not working at your employer, you should be able to take all your 401k out. If you either quit
I'm not.
or
I haven't. It's my 2-year anniversary of being unemployed is coming up, so we'll see how that goes with on the last tax returns. All right, so this is what I wanted to get to. I have this screen, and I'll circle it right here. So this is actually the time when you got into gold. Like you said, it was around 2002. And when I heard you say this on another podcast, on Adam Meister's podcast, I actually spent all night putting together this chart. I get on these I get this thing like, okay, I need to do this now, and then I don't realize how long it takes me. And then the next thing I know, the sun is rising.
yes.
But so I wanted to take a look at the investment proposition of gold versus the stock market. And I understand that people say, well, gold is what you want to use in order to preserve your wealth. And I took this chart back to 1976, mostly because I didn't have the data going all the way back to 71. But in 76, I kind of locked out because the price of gold and the price of the stock market were both at around 100. So the S&P was at around 100 points, and the gold price happened to be about $100. And it looks like it was a low in like a 1 or a 2 year span. Right here in the bottom left corner. And this was just before the big rise to 800 in 1980. And I took a look at this, and then up here on the right, I did the math of how much your $100 would be worth today if you invested it in gold, or if you invested it in the S&P 500. And it turns out that the only time you would be sitting in a profitable position with the gold versus the S&P 500 is if you happen to get in this area of like 1998 to 2002, which is when you happen to get in. I also looked it up, and this is where Max Kaiser always talks about getting in, and this is where Peter Schiff always talks about getting in. I thought that was an amazing coincidence. But my view on it is that while gold is a good way to preserve your capital, it fully adjusts for inflation. And we will talk about the manipulation, whether it's overvalued, undervalued. You obviously think that it's undervalued, while I think it might still be slightly over, but that's different. my view recently, and I was a gold buck. By the way, I do own gold. I don't want to go off on a tangent here. I own gold, physical gold. I own physical silver. I was big on gold like before I discovered Bitcoin. My view now in hindsight is that the stock market also adjusts for inflation, but it also adjusts for improvements in technology, which has been going up a lot in the last 100 years. And this is why people think the stock market is always overvalued when the good companies go into the S&P 500, the bad companies come out. And if you reinvest your dividends, what you end up with since 1976 is your $100 in gold would be worth $1,100 today, but dividend reinvested S&P 500 would be worth $7,000 today, which is about 5 to 6 times more. And I did take the numbers back to 1971, and if you go to 1971, gold would have made you 3,000% because it would have been like $35 back then, and the S&P 500 would have made you less than that without dividend reinvestment, but a lot more than that with dividend reinvestment at 9,000%. So what is your view on this? And one more note, and sorry, I know I'm going off on a tangent now. One more note is some people did the math, and I found this very interesting, that if only Donald Trump put his inheritance into the S&P 500 in the 1980s, instead of becoming a real estate tycoon, he would actually have 4 times more money today for doing nothing. But obviously he wouldn't be president because no one would know who he is.
Right. Okay. Well, why don't you go back to that chart and I'll just discuss stuff.
I can actually lock the chart in. Hold on one second. I'll put this on me, and then you can talk while the chart is up, and I can draw on it if you want me to point to anything or zoom in.
Okay. Well, first of all, I'll say 2 things that are the big flaws of this chart. The first is manipulation. There's a reason why gold is not higher than what it is, and there's a reason why the S&P 500 is as high as it is, and it has little to do with fundamentals. And we can go into the fundamentals. I mean, you understand that we basically have record high valuations right now, and record low real wages and record low earnings quality and record high debt, and the reinvestment of dividends by the companies now has been going into stock buybacks, et cetera. But all that's immaterial because of the manipulation. That's what the President's Working Group on Capital Markets does every day. That's what the Federal Reserve does every day in the bond market. That's what the Exchange Stabilization Fund does in the gold and foreign exchange markets every day. And basically that is what the gold cartel is. So anything that you look at in that chart to try to gauge performance should be taken with a grain of salt, that the government is there every day supporting the stock market, and it's there every day holding the gold market down. I've written, you have that article that I gave you, the one that's called 12 o'clock cap of last resort, which I just wrote. It's just another one of the algorithms they use to cap gold at 12 o'clock Eastern Standard Time every day. And in that I list all of, if you scroll down, I list all the other articles that I've written about the various algorithms that hold gold down right there, and also the ones that support the stock market, starting with the most blatant one of all. I call it the dead ringer. I mean, pretty much the Dow goes up every day in the exact same chart pattern. And I wrote that article 5 years ago, and it was going on before that. It's basically, it bottoms at about 10 a.m. Eastern Standard Time, which is when the Fed has its open market operations, and it goes up throughout the rest of the day with the little Hail Mary rally right at the end of the day. Probably 3/4 of all days is that same thing, and most of the other days is what I call a variations thereof, where it's not exactly that, but it's something like that. Whereas with gold, every day, I mean, look at today, it's the same thing. You could say, well, it's down because Janet Yellen spoke. No, it's down because she spoke at 10 a.m. Eastern Standard Time, which happens to be the London gold fix when the physical markets close for the day, and it's what I call key attack time number 1, going back 30 years, and it's the same every day. So that's number 1. The other thing that this chart is not realizing, it's a very U.S. centric chart, and one of the things I talk about most in my writings, especially because incredibly, for all the currency crashes around the world and all the things going on around the world, most of the analysis, and the same goes for Bitcoin, it comes from the United States. And Americans are very secular, and they think the world revolves around them. They don't realize that there's only, I don't know, 400 million people in the world, 500 million using the dollar, but then there's 7 billion people using other currencies. So if you plotted the price of gold in any currency, I mean any currency other than the US dollar, which is where the manipulation is focused because the US government is trying to maintain the reserve currency status, it will blow away the S&P 500. And I'm talking about, Tone, there are 180 currencies in the world. I'm talking about 179. Look at the here are currencies that are, gold is at an all-time high right now, in the Mexican peso, the Brazilian real, the Russian ruble. It's within 10% in Australian dollars and Canadian dollars, in Indian rupees. Even the euro is only, I think, about 18% from its all-time high, and the pound almost got to its all-time high during the Brexit, and it's still only about 15 or 20% below. But here it's 35% below, because this is where the manipulation is focused. And the thing that's so crazy about it is only a very small percentage of the global consumption of gold is here in the States. I mean, the vast majority is in the Eastern Hemisphere, and yet we still control the pricing with these rigged paper markets in New York and London, and that won't last forever, because the problem is that the thing that ends this all is this supply and demand. It's that simple. So when you say, are gold and silver overvalued, undervalued? Well, I see all the algorithms every day trying to take oil up and say, well, OPEC's going to cut production, so it's going to go up. Well, oil, we have all-time high production, all-time high inventories, no real reason to believe the cuts are going to occur. And of course, any cuts that do occur are being offset by increases like with shale and other non-OPEC producers. And yet we're told the fundamentals are good. Gold peaked. The production of gold peaked last year, and even the mainstream was predicting it will fall by 20 to 25% in the next 7 or 8 years. And that's with demand this year. I mean, demand in 2016 was at an all-time high for both gold and silver, and both have peaked, and we'll see production declines at a time when all these currencies around the world are being serially destroyed. And gold is even being bought net by governments right now. So, again, you look at those charts, and there were times where gold outperformed, but starting with 2008 and particularly in 2011, when basically what happened was in 2008 they slammed the gold price down initially when the markets went down, and guess what? We had a major physical shortage. I'm talking about major. The premiums on silver at the end of 2008 were 100%. So the price never really went down. And then what happened was 3 years later, all those TARP and all the things they did after the bailout weren't working, which is.
Did I lose you, Andy? Oh, I think we lost Andy Hoffman. Hopefully he will come back in. All right, so I'm hoping that Andy can get back in. I don't want this to be a one-sided podcast. Here, let me see if I can connect with him on Skype. Otherwise, I just got scammed by Andy Hoffman just when we were about to talk about manipulation of gold. All right, and we are back with Andy Hoffman. There was an internet outage. So right before we left off, I was showing the audience on YouTube, or those that are just listening on a podcast, because Andy was talking about there is manipulation of the markets to the upside and gold to the downside, and we're going to talk about that in a minute. But I did point out this is a paper published by the Federal Reserve. I think they published it like 5 or 6 years ago, and they talked about a concept called FOMC announcement drift, 67-page paper from the Fed itself, and they basically explain this chart right here, just so Andy is aware what we talked about while he was gone for a little while. And I'm just going to draw right on this. So this is what happens the day before the Fed announces their rates. This is the S&P 500, and this is what happens the day of. Basically, the S&P 500 on average for the last 20 plus years was up 0.25% the day before the announcement, and 0.35% the day of the announcement, and an up day even the day after the announcement. And if you combine, if you only bought stocks the day before the announcement and sold the day after the announcement, you basically replicated 25 years of gains in the stock market identically, only trading those 3 days. And this is interesting. I don't know if this means that the market is manipulated because you don't know what exactly the Fed is going to say, but the market is reliant on the Fed and the government, so they're kind of buying into, no matter what they say, it's going to be positive. So it's like a self-fulfilling prophecy, in my opinion, in that the market has outsourced the Fed to keep the market up. And therefore, everyone assumes no matter what happens, the Fed will keep the market up. And in a way, it makes sense because there's just everyone in the government themselves, the better the market does, the better everyone does with their retirement plans, with their companies. So it kind of benefits everyone. So, I mean, again, right, you can call it manipulation, but it's definitely debatable because I think people seem to actually want this in a way.
Yeah,
what do you think about that, Andy?
But Tone, I think you're just, to me, you're just attributing too much of what goes on in the market with the assumption that it's freely traded. I mean, what's showing there? I've written about the FOMC drift forever. I mean, read what that says, people. More than 80% of the equity premium in stocks over 30 years is achieved the day before and the day of FOMC announcements, especially when they always say exactly what you know they're going to say. And that would go for today, too. Today's a perfect example. It's no longer, in fact, I write every day. I've written about the de facto FOMC announcements that go on all year long. Twice a year, Janet Yellen speaks before Congress, Humphrey Hawkins. She has the Jackson Hole meeting. And now it seems like every time any Fed president speaks, that's a new one. And it's always the same thing. I mean, if you showed a chart of what gold does when the Fed speaks, it's the exact opposite. And today's a perfect example. I mean, the second that they speak, gold gets smashed and stocks go up. It doesn't matter what they say. I've been watching this for 15 years. And the fact is, think about what the Fed has done since 1994 when this started. They've printed money into oblivion. The debt has exploded. Currencies around the world are crashing. We're having political crises around the world. They're obviously not doing things bad for gold. But, take a look at today's gold chart. It's prototypical chart, 12 o'clock capital last resort, 10 o'clock smash, 215. And the Dow had a perfect, as I call it in the Dow Jones Propaganda average article, dead ringer algorithm. It's always the same every single day, especially when the Fed speaks. Yeah.
And I agree with you, and I want to agree with you more, but I've learned to live with this. And at this point, I try to trade and profit knowing this is happening. I don't try to fight it anymore. I just, I kind of accept it. And I think the majority of traders accept it and try to trade with it because, and we'll get to what can be done about this.
I agree with you completely. Look, if I were a trader and especially if I was, God willing, trading other people's money, I would at 2:15 a.m. Eastern Standard Time every single day short gold, as well as before the COMEX, and at 10 o'clock Eastern and at 12 o'clock. And right now, 4 o'clock, because they always walk it down in the Globex market, et cetera. At 8 o'clock p.m., which I call the 8 o'clock p.m. algo, just as the nighttime is starting to open in Asia. The Sunday night sentiment, it's been like 120 out of the last 130 Sunday nights. You name it. But I'm not talking about trading. If you want to trade, if you're catering to traders, perfect. But I'm talking about, what people buy and hold. And again, holding the price down in the big picture and holding stocks up has caused this horrible fiat Ponzi scheme to get worse and worse. And that's why the world is in the debt situation it's in, and the currency situation and all these political revolutions. I mean, it's good for traders, especially astute ones who watch it, and that you're showing absolutely that's a perfect example of it. But it's not good for the world. So
let's talk about it specifically because you've mentioned it a couple of times, and I do have a chart. So this is probably one of the best cases that has been put out that proves that there is manipulation going on. And I got this from Zero Hedge, but it wasn't a lot of other places.
Yeah, Dimitri Speck is a good friend of mine. He's awesome.
The Actiman blog. Yep, I used to read that. I haven't really had time for it much anymore. And I agree. Look, there's like a quote from Deutsche Bank says, "Yeah, we smashed it." And they're talking about the gold price. And here is the chart of gold. Now, this is approximately a 4-year span, almost 5 years, 4.5-year span right here between 98 and 2002 that shows this is 1 day. So this is the average move of gold, and it's normalized to 1,000. Of course, in 1998, the price of gold was around 250 or something like that, in that vicinity. So this is normalized to 1,000, and it's showing you that the AM fix, let me get some lines here. It's showing you that the AM fix has a big drop, and then there was a really big drop later on for the
that's the COMEX. That's the COMEX open right there.
Right.
So net gold in a bull market that's last 15 years is down in New York hours, even though the majority of production and consumption is overseas, but it's up in overseas markets.
Right, but here's the thing though, and I agree with you. Look, I don't deny the fact that there is manipulation, but to me, someone has to benefit. And obviously, when you allow the big banks to dictate the price on certain hours, just like in the LIBOR scandal, they will try and rig it in order to profit. But to me, these are short-term profits. And if you look at this drop, right? It looks, oops, not where I meant to draw. Now, the drop looks really, really big. But if you look at it over a 4-year span, the average size of this drop is from 1,000 to 999.5, which is not even, that would be, this would be 0.1%, 0.05%.
Yeah, but Tom, look what years you're talking about. 1998 to 2002. There's been 15 more years of data since. And yes.
That's fine. That's fine. We can assume that we can assume that this kept happening for 15 years, right? But here's what I'm trying to point out, is that this entire drop, as in the year 2000, this drop, so gold was priced at 250. We're talking 50 cents off of 1,000. So gold was 4 times cheaper then. So this is an advantage of approximately 15 to 20 cents per ounce of gold per day. That was their profit on this smashing. And now if we look what happened during this 4 to 5 year span, on a 24-hour basis, the price of gold actually went up. It didn't go up a lot, but it went up. So we are literally talking skimming pennies. And I know this is wrong. And I think that the banks should be held liable. They should be held accountable. If they find the smoking gun of the person, who's responsible, the CEO, whatever, I think they deserve maybe not jail time, maybe jail time. It's up to the courts to decide. And clearly this is manipulation. But to me, this is manipulation to basically skim pennies, literally pennies, in front of a steamroller. Right. And one of these days, they can also get hurt. And to me, this is not a smoking gun for like systematic government-approved manipulation to keep the gold price down, because you clearly see even during this time, the price of gold went up by end of day.
Okay, well, let me just say this. I don't think it's possible for me to disagree more on many fronts about this topic. Now, again, people are listening. I probably know more about gold manipulation than all but a handful of people on the planet. It's what I've done for 15 years. And again, I'm a financial market professional to start with.
Right. This is why we're talking. So you can try to prove me wrong here. Look,
first of all, it's not a question of whether the price ultimately went up. It's what should it have been? I mean, what should it be right now? What would be the impact on the world if gold was where it is? I mean, think about it. When gold hit its high in September of 2011, again, not its high in other currencies, it's high in dollars. It hit its high on the day that the euro was pegged to the franc by the Swiss National Bank, which, that you couldn't find a more bullish event for gold if you tried, because you're literally taking the only remaining currency in the world that had any real backing of anything. And they're saying, we're going to make it a fiat currency. That's the day that they picked to do that. Okay. And in between, all the giant giant smashes on days where enigmatic, you'll have a terrorist attack and it goes up and then it immediately goes down, or the Fed says something extremely dovish and it goes up, but then it immediately goes down, and across the board. And the thing is, you're talking about Deutsche Bank. This is the big thing that people need to understand. This is not about Deutsche Bank. Deutsche Bank, you just said before, I see that there's probably manipulation. And as a trader, I try to take advantage of it. That's what Deutsche Bank is doing. The manipulation is from the governments. And if you want proof, I can list miles and miles of proof, from Alan Greenspan admitting it to the head of the Bank of England. Google it, everybody. Eddie George, Bank of England, Fed, held gold down to save the world. And William White, the head of the Bank of International Settlements. I mean, this proof is out there everywhere you can look. But the point is, the Deutsche Banks of the world, who are stupid enough, they're traders, to write chats talking and bragging about what they're doing, they are just piggybacking, like you're talking about, unknown patterns. But more importantly, the Deutsche Banks of the world, in some cases, are actual collusive partners. I mean, the Fed doesn't do all their trades themselves. They have proxies. They have the Goldman Sachs of the world and the JP Morgans and the Deutsche Banks to do their dirty work for them. And why do you think these guys put up so much capital, and how they never lose money ever? They make money every single day because they have insider information.
They have insider information. They trade against their clients. They know when their big clients are going to buy, and they skim right in front of them. I totally understand that part.
The government. They're also in partnership with the government in some case. I mean, JP Morgan admitted in court back in, I think it was 2004, they were sued by a gold dealer, JP Morgan and Barrick Gold, which at the time and still is the biggest gold miner in the world, were sued for manipulation. And JP Morgan said, we claim immunity because we were acting as an agent of the government. I mean, again, see, people just don't care. They don't want to look at the evidence that's out there, even though it's staring them in the face. But it's all out there. I mean, that's what GATA has done for 15 years, and that's what I've been doing. And again, all these movements that you're showing, like Dimitri Speck's movements, which, yes, they're about the same even if you add the 15 years of data. These are like Six Sigma movements. I mean, the way, the fact that the gold price chart today is the same as pretty much every day, and the same that the Dow would be the same as every day. I mean, you would look at today's charts and you wouldn't know, if you looked at the Dow chart, you wouldn't know that the Fed spoke. It just does the same thing every day. And you wouldn't know it from the gold chart because it's the same thing every day.
Well, I've traded that. I mean, I had a whole strategy going. I used to trade the 10 a.m. reversal, the 10 and 11 a.m. reversal. I used to just watch for those. I have made money on it. I trade differently now, but there's definitely strategies there. But okay, so we are separating this kind of manipulation by the institution in order to skim some pennies from the longer-term government-induced manipulation. You agree that they're two separate things, and I would like to see people separate the two more, because I think Zero Hedge does a terrible job in doing this, because when you see all these articles, Deutsche Bank agrees to manipulation of so-and-so asset, half the time they don't even say in which direction they're accused of manipulating the asset.
Right. And again, you
go ahead.
LIBOR, you're talking about skimming pennies, okay? Kind of like in what's that movie, Office Space, where they're skimming pennies off of every transaction. That's what LIBOR was. But then you have the mortgage fraud, where they're literally making up credit applications so they can, or in Bank of America, making up credit card applications to skim fees off of unsuspecting people. In Goldman's case, they were actually trading against their clients on purpose and setting up things that they knew would fail. But when it comes to gold and silver, I mean, these are the ultimate monetary assets throughout history. And if there's two things that people know in the world financially, if the Dow goes up, that's good, and if gold goes up, that's bad. And so when gold is rising, it terrifies these governments, and that's why they've always manipulated, whether it's the London Gold Pool or fixing the price at $35, or what they do right now, which is far more covert, even though they leave plenty of evidence out there. So yes, this is a government thing when you're talking about monetary metals, as opposed to, and so is stocks. The PPT, which was created, the Working Group of Financial Markets, was created in 1987, And now it's a 24/7 thing. And what do you think the Fed does with buying bonds all day, or the Exchange Stabilization Fund, which has been around since 1933, and their mandate is to intervene in the currency and gold markets. So again, some of it is government related, and the rest is, they just let the Deutsche Banks kind of do whatever they want for fun. You want to do the LIBOR, hey, you may get a slap on the wrist once in a while, but in the meantime, you skim tens of billions of dollars.
Yeah, no, that's fine. And so we'll move on from there. So one more point I wanted to talk to you about is that I know of at least two very big public incidents where silver, gold is a little bit bigger, where silver was actually manipulated to the upside. And maybe you can comment on some of these. One of them was the Hunt brothers tried to drive silver prices up in the late 1970s into 1980s. And the other one was Warren Buffett in the late 1990s. And there's lots of material written about it, and some of it is actually contradictory. I know Mark Armstrong has written a lot about it, and his position is all the money is made manipulating gold and silver to the upside. You rile up all of the precious metal bulls, and then these the dealers and the big institutions, they will sell right into the hype and profit on that. So what's your opinion on that? And maybe you can shed more light on those two incidents.
Yes. Well, first of all, let me just say, anyone listening to Martin Armstrong's commentary, especially about gold and silver, just buyer beware. I don't think there's anyone I have less of an opinion of in this business, and I'm just going to leave it at that. But as for the Hunt brothers and Warren Buffett, two extremely interesting things. Now, what the Hunt brothers were doing was, they were trying to corner the market in silver back in the late 70s, which, particularly in 1979, when the price went from, like $10 up to $50. They weren't doing anything illegal. Right now, the concentration that they had isn't even close to the short concentration that the big four have on the COMEX right now. By the way, silver, only commodity to be in a net short position for the past 20 years, and during a bull market, I might add. But again, the long position the Hunts had as a percentage of the market is dwarfed by the short position that the big four have right now. But it was a thin market at the time, and it was a bit of a Wild West, and they were trying to corner it. They even got some of the Arabs to come in with them as partner, and it drove the price up. The manipulation, though, wasn't them, because they were doing it legally. It was when the government came in and said, we're changing the rules on the COMEX from now on. No one's allowed to buy in the ask. You can only sell. And so, crushed that market. And that was, that was 35 years ago. It was a weird time in history. There was also major inflationary scare going on, which came and went. So that's that one is, that one's more of a overt instance of games being played, but ultimately it was the government that was the one that did something that changed the rules illegally. But the Warren Buffett one is even more interesting, because if anyone is aware of the background of Warren Buffett, his father, Howard Buffett, was a congressman for many, many years, and he was the ultimate gold bug. I don't think there was, aside from maybe Ron Paul, a single congressman in the history of this planet who was as bullish about precious metals and bearish on the fiat monetary system as Howard Buffett. So, keep in mind, this is Warren Buffett today. All he talks about, he says, they're barbarous relic, and the stocks are the only place to be, because he's a crony capitalist who benefits from, being a government mouthpiece. And he was bailed out himself at Berkshire Hathaway. And also he was given the free shares of Goldman Sachs and General Electric at the bottom, even though he had called their derivatives weapons of mass financial destruction. So he's just a crony capitalist. But the instance with his silver is so interesting, because he acquired it, I think it was sometime in the 1990s for like $4 an ounce. It's like 150 million ounces or something like that. And then he just kind of mysteriously didn't have it anymore in the middle of the 2000s. And anytime someone asked him, I think his answer was so vague about, I don't have it anymore. He didn't say I sold it. And it turns out the exact amount
that he had, I think it was like 130 million ounces, turned out to be the exact amount that started the SLV ETF in roughly 2006. I don't think there's any coincidence there, because there's no way anyone could acquire 130 million ounces without causing the price to spike. And he was also at the same time being kind of investigated for some kind of shady deals he was doing with AIG right around the time of the financial crisis or right before it. So I think the government somehow forced them to get it to give it up to them for some reason and to get it to the SLV. But again, that's just the evidence out there makes me believe that, but I can't prove that.
All right. Well, that was interesting. A few things there that I haven't heard of. All right. So I know we're already a long way into it. So now let's talk about the current situation and what can be done. Because I like to structure this podcast. We talk about the beginnings, we talk about the current situation, then we talk about the future. So in our current atmosphere, so what would you like to see done? I mean, if you, how would you like this thing to be resolved? Like, what are you looking for? How can this manipulation end? Because I will tell you, like, as a small investor, I love the fact that I can naked short gold and silver, because me and my $30,000, $50,000 account, I can short like 10 gold contracts at 33 ounces in each gold contract. I think silver is like 5,000 ounces. And I can do it with only like, less than 5% down. And I love the ability to naked short, right? Like if we remove the ability to naked short, then the retail investors are gone.
Yes.
What do you think happens?
Yeah, I mean, I'm just cracking up listening. A professional trader. I mean, you're saying, yeah, it's illegal to do it, but we do it. They let us do it. I mean, you shouldn't be allowed to do that, right? It's not your fault if they let you. You're supposed to say short, and it says, no, we can't borrow that, so you can't short it. But that's because the government loves to let people naked short gold and silver. In fact, I just sent you that thing from Bix Weir today. He put out his thing is showing that the amount of electronic silver that trades in a day is half of the mine production of an entire year, and you shouldn't be allowed to naked short it. I mean, it is illegal, but they let it happen because they're happy to have people short, and that they know that they are in there pushing the price down, and there's going to be a lot of traders like yourself, and I would do it too if I was a trader, who are going to piggyback that. But the problem is, it's not a matter of what I would like to happen. It's what will happen. It's what always happened. Right now, as I said, the supply of gold and silver has peaked. It's going down. It's not going to. It's already on the way down. And in gold's case, the estimates are it'll be down 25% over the next 8 years. I mean, think about what's going to happen in fiat currency world in the next 8 years. And there's going to be 25% less gold. And in silver, which also peaked, it'll be probably about the same thing. So again, what'll happen is eventually you're going to have shortages. Silver, we've had them all the time. In 2008, when they smashed the price during the crisis, the premiums went to 100% in the physical market, and we as a bullion dealer couldn't get product for like 3 months.
Yeah, no, I know. I was
so that's how it will end. It's not like what I want to happen. That's what will happen as people get more fearful and try to get physical. That's increasingly not there.
No, and I agree with you. I mean, I started buying some physical silver back when it was, I think when it fell from 50 to about 30 to 35 bucks. And I remember shortages at my dealer down the street from me, and the premiums were outrageous. I mean, when silver was down to like $20, they were charging a premium of like $5 to $7. It wasn't 100% premium at my local dealer, but it was like 25 to 30% premium, and I thought that was insane. Wish I was.
Well, that was
Bitcoin back then. It was like
that only happened in 2008. In 2008, because again, they were trying to make it look like it wasn't a safe haven. So they hit them both. And so in the bottom in 2008, the gold premium was 30% and silver was 100. We also have had big premiums during 2011, 2013, and 2015 for different reasons. Never as high as 2008. But, we'll have them again. There's going to be a crisis, and the same thing happens. You call up Miles Franklin, say, I'd like to buy some. And we'll say, okay, but the premium is 20, 30%, and you're going to have to wait 6 weeks for it. I mean, that's how it's going to resolve. And eventually it's going to be governments that are fighting with each other for the final scraps, because as these fiat currencies are serially destroyed, they want to get out. And, to me, and we'll get to Bitcoin in a second, I have not seen any other asset on the planet that I'd even dream of using for that purpose until Bitcoin came around. So now there's two.
All right, so before we get to Bitcoin, so you actually don't like the concept of futures trading in precious metals. You don't think that people should be allowed to trade the futures contracts unless they actually have possession of the underlying gold, or they have a separate contract leasing this gold out, and this contract would have to be like on the blockchain to make sure it's not being double spent.
Well, I don't care about futures contracts as long as there's no naked shorting. And that's the same for stocks or bonds or anything. There should be no naked shorting.
But isn't that the definition of a futures contract, right? Because like I am going into a futures contract with you, you might actually have enough gold or silver, but if I'm going into one of these contracts with some random guy like me, neither one of us has the gold. I create a futures contract. He wants to take the other side of it. And then in a few days, we might cancel the contract out. So to me, no gold was ever going to get exchanged. We're basically speculating on the price of gold. And I understand that all these contracts together now combine is like 95% of all gold trading, which is why they determine the price of gold. So it's like the chicken and the egg situation. Like I'm sure when this thing started, I mean, like, well, some people want to try to profit from the price of gold. Gold is being physically traded, but then this futures market grew so big that it's now determining the price of gold. And if you eliminate the futures market, there may not be like enough physical gold being traded back and forth to get a real price going. You have no idea where it's going to be, in my opinion.
Well, first of all, there's always going to be enough gold trading, especially if they let it go and it goes to a price high enough that people are interested. But again, people don't realize why the COMEX came around in the first place. In fact, I just found this WikiLeaks recently. In 1974, just before it was created, there was these WikiLeaks showing between the United States government and the UK government saying, we're going to start the COMEX so we can have this gargantuan paper market, which will dominate trading and prevent people from wanting to hoard physical metal. I mean, it's basically saying, in fact, it came online, if you could believe this, the COMEX, the day before gold ownership was legalized on January 1st, 1975, for the explicit purpose of preventing people from wanting to own the physical stuff and dominating the trading. But again, the fact is, there's no way that this should happen, that people should be allowed to sell something they don't own. I mean, it was only, a few years ago, 5 years ago, 10 years ago, they were talking about when they got rid of the, what was it called? God, I forgot already. The short sale rule, the uptick rule, right? Where you used to have to short on an uptick. They just got rid of that. Somehow, I don't know why. And now you're saying you can borrow stuff. You don't have to borrow anymore.
I like that rule, I guess, but I don't really know enough about it. I mean, if I had time, maybe I'm sure there was some research by economists done and finance people. I'm sure there was some research that proposed the change originally, and I'm sure there was a research that proposed the elimination of the rule. I have not looked into it.
You know why it doesn't matter now? Because the PPT, the President's Working Group in Financial Markets, makes the Dow go up every single day now. It doesn't even go down intraday. But believe me, I mean, when I was in the hedge fund business in the mid 1990s and before, markets would fall on a regular basis. And when they did, people would say, well, it's those damn short sellers because they're shorting not on upticks and they're pushing the prices down. Here it doesn't matter because the stock market's never allowed to go down. But the point is that all these rules have been completely flouted. It's to the point where you're a professional trader and you're not even aware of the uptick rule because it's been so put in the dustbin of history. And the same goes.
It doesn't really. I'm not that big of a trader. It doesn't really affect me all that much. So there's really. I mean, I knew that it went away. I just had forgotten because it never really affected me. But if I take this further, that means you're looking for elimination of almost all futures contracts. Like oil would fall into this boat, and platinum, and copper, and what about derivatives on food? Like I don't trade coffee or sugar or cotton, but I could if I wanted to. So you don't think I or a hedge fund should have the ability to trade them unless they also literally hold physical possession?
Oh, we're talking about commodities now. I mean, you could always do it with stocks, although again, how many stocks have been destroyed by naked shorting? Just look to the mining sector, which is literally, it's destroyed the sector, like thousands of jobs. All these countries around the world, these poor nations, have been destroyed by the naked shorting of miners, so they ran out of money and couldn't explore anymore. And then, of course, the collateral damage on the monetary system, et cetera. But the point is, I mean, you shouldn't be allowed to sell things you don't own. I mean, do I care? Do I care if Tone Vase is allowed to short cotton? The point is, cotton should be traded by people who have cotton. And if people want to create vehicles to trade, speculate on the price, that's fine. But again, 10 years ago, we didn't even have ETFs. It's just, these are just ways of, one, creating revenues for brokers and a haven for high frequency trading to destroy markets. And also to manipulate markets. I mean, the manipulation I talk about in gold and stocks and bonds and everything is exponentially larger with each passing day because of all these algorithms and lack of rules and futures markets and the derivatives explosion.
Okay, so let me take it to the other direction then, because now we're getting into something. So you think there would be less manipulation if, let's say, there were no derivatives on gold, silver, commodities? Fine, so let me take this over to diamonds, because diamonds, I don't understand why there aren't derivatives on diamonds. And because there are no derivatives on diamonds, you have these monopolies like De Beers. I mean, maybe I'm talking, maybe they're no longer the monopoly.
Yeah, that's dying, but they did for many years, like OPEC.
And right, so I personally, I mean, maybe this is the reason why I'm not married. I personally don't want to buy a diamond because I think they're grossly overpriced. There's absolutely no resale value. I think it's insane that this shiny rock that I don't even think is rare is worth so much. And I think if there was a derivatives market, a diamond would be a hell of a lot cheaper. What do you think about that?
Well, I mean, we're talking about a very, very esoteric market. In case of diamonds, I believe that De Beers kind of people have been broken up for the same reason that OPEC, and again, I was an oil analyst for 10 years. The reason OPEC is ineffective right now is because there's too many other producers out there. De Beers no longer has a monopoly on the supply, so I think the diamond price has gone down. And certainly the resale value has plummeted because you're right. I don't think it is very rare. And oil's the same thing. All they have now going for them is what I call the oil PPT that comes in every day and tries to support prices. The problem is, like gold, if you suppress the price too long, production falls and demand rises. And the same thing with oil. What they just did is they try to prop up the price by saying that they're cutting production, which they probably didn't do. In fact, they're even admitting that they're cheating, which they always do anyway. But all they've done is create increased production from the shale producers and the other parts of the world that they can't control. So again, it's market forces that cause prices, whether it's diamonds or oil or gold. In the particular case of gold and silver, though, they have been and always will be such a kind of canary in the coal mine in this fiat system, because it's the natural enemy of fiat money, that all these great lengths have been taken to hold the price down, some of them overt, some of them covert. Today, it's getting to the point where it's so blatant that you have traders bragging about it. You have central bankers talking about it constantly. And the ultimate thing is, it's not that I want anything to happen. I know what will happen. We're going to have shortages, and eventually what I call the gold cartel will be blown out of the water, just as OPEC is on the verge of being blown out of the water, and De Beers has been blown out of the water.
Yeah.
Supply and demand.
And I kind of agree with you on OPEC, though I still think that the price of oil will rise a little bit. I'm actually long oil at the moment, looking for like 60 to 70. But long term, I'm very bearish oil because I think technology is going to render oil useless. But I also kind of have a similar view on gold. I'm longer term bearish on gold for similar reasons. I think technology has been, and the young people, the millennials and the next generation, they don't value gold like the previous generations did. Now, perhaps if there is some kind of economic apocalypse, gold may come back, but I try not to. I was prepping for it, but I'm kind of staying with the herd and I'm just going to try to profit in fiat from that collapse with Bitcoin as a backup. That's kind of my
put it this way. Again, you're talking mostly to people who are American, okay? It's not that gold is outdated. Anything that goes up in price is not outdated. It means that someone wants it. And I'm telling you that around the world right now, I said in the beginning of this podcast, the price of gold in nearly all currencies right now is at or near a high. I mean, if we're talking about...
So is the dollar, but so is the dollar. Like the dollar is very, very strong. Like I'm going to be in Mexico next week.
I mean,
the
euro
dollar versus the peso is going to be huge in my favor.
Yes, and look, I've said this. There's no one who's predicted, because a lot of people in my space are always like, you got to buy gold because the dollar is going to collapse. And I've always said that's absolutely ridiculous. For years, I've said the dollar is going to keep soaring because it's the reserve currency. And when you have crises around the world, as we've had the last few years, particularly now, people flock into liquidity, which is the dollar. So that's why people are leaving Europe, the euros and the yen and the yuan and pretty much everywhere else for dollars.
They're going to the dollar.
But the dollar is losing its purchasing power in general, which is why the cost of living the cost of living around the world is skyrocketing. But even here, it's skyrocketing. Look at the cost of housing. Affordability is at an all-time low right now. The cost of insurance, all-time high. Education, all-time high. So again, the dollar is losing value gradually, but it doesn't lose as much because it's still the reserve currency.
I don't want to start a debate. I think the cost of education is at an all-time low. And it's a little contradictory in the fact that if you really want to learn, you have YouTube.
Well, I'm not talking about where things are going. I'm talking about what most people are doing now. Look, I talked about this forever. All the current stuff. I just did an audio blog 2 weeks ago called "The Shocking New World You Won't Believe," saying, for instance, money will change to Bitcoin. No one's going to go to college. No one's going to drive cars because all these stupid things are going to be gone. These institutions like education. But the fact is, what people traditionally do in America, the cost of it is incredibly high right now and going up until it goes away, until it changes. And look, the dollar is losing purchasing power, but other currencies are losing purchasing power faster. And if gold were not held down, it would be up a lot more than it already is.
Yeah, I have to. I mean, I can push back on this a little bit. Being unemployed for the last 2 years, I strongly have restructured the way I spend money and live my life. And I don't feel that way anymore. Like it felt like everything was getting more and more expensive back when I had a 6-figure salary and I'm spending all this money. And now that I'm very, very careful how I spend my money, I mean, I got a new phone plan, the one that saves me some money. I watch how I spend. I keep an eye on electronics. I try to buy optimally. I watch how I drive. I watch where I drive. And when you actually start breaking it down, I don't think that things are all that much more expensive. I shop at farmers markets. I try to buy groceries. I actually keep an eye on prices now. It's different. Like you want to say, I mean, I've been rich, then I was broke, then I was rich, and then I was broke. And it does give you, when you go back and forth, it gives you a really good perspective. And it happens to very few people. But it's hard for me to say that the cost of living is so much higher now than 5 or 6 years ago, because my cost of living is cheaper because I'm watching how I'm living now than I did 5 years ago.
Well, first of all, and I've written about this want versus need.
And I'm in New York.
I've written about this want versus need concept forever. I mean, yes, electronics are going value. That's a want thing. You don't need a new television, but you do need health insurance, especially if you have a family, like with kids, like I do. And the cost of health insurance, to say that it's skyrocketing is the understatement of the century. I mean, it's going up 30 to 50% a year. And believe me, it takes a big chunk out. And rent right now, you may have your specific situation, but it's a fact that the average rent price in this country is at an all-time high today. And housing is the number one, not to mention the home price index hit its all-time high last month. So housing, and insurance, which are two of the biggest line items in the average family, have skyrocketed. Education is another one, because whether the world's going to change in the future or not, right now I'm paying huge amounts for my kid to go to preschool. And one day, if I wanted to send her to college, which I don't, I'd probably be paying like $500,000 for it. So Again, look, you can pinch pennies, and especially if you're single and you're careful, you can keep your cost relatively the same. But the fact is that the big line items in life are going up right now, and around the world they're going up much more. Think about if you lived in Europe. Think about the euro went from 1.6 down to 1.06.
We're gonna get to the euro in 1 minute. Okay. I am ready to talk about the euro in 1 minute. I will say that, yes, inflation on education and insurance has been skyrocketing, but those are also two of the biggest government interfered with markets. So I have a huge correlation on that. Same thing with housing. Government was majorly interfering with housing, hence we had the housing bubble. So
energy, the oil PPT, you name it, they're interfering in everything.
Right. And that's why I don't like. Obviously, the least amount of government interference is in technology, which is why we have deflation in electronics. And meanwhile, the more government interference, and now that Uber is able to get around government regulation, our transportation is starting to go down in price. If you're ever down in Miami, like Uber, the only place that I know that I've been to where Uber is cheaper than Miami is Vietnam. And the reason it's so cheap in Miami is because the Cuba opened up and all these Cubans came in. They can't speak English, but they can drive a car.
Yes, and again, this is exactly what I'm talking about. This technology, including Bitcoin, is changing the world. And by the way, what's going to be the net effect as this technology takes over? This massively overpopulated world is going to have all these people desperate for money, and governments are going to print it into infinity, like socialism and communism, to try to feed them. And what's that going to do to the monetary system? It's going to crash it further and get people to want to buy the scarce amounts of gold and silver and Bitcoin that are out there.
Okay, so let's finish up the current situation, and then we can move up to what we're looking into the future. Okay. So do you have any solutions for current, or you're just looking at, just try to buy as much physical gold and silver, try to buy up Bitcoin, and just wait for the inevitable implosion of the US dollar, though you and I agree that the other currencies are going to implode first. So we might actually have some time. We're talking maybe another 10 to 20 years. What's your timeline here? If you don't have like a solution to implement now.
Well, we're definitely not 10 or 20 years going to be still playing this kick the can game. I mean, look, we may not even have a euro 1 year from now. And who knows what the Chinese currency will look like a year or two from now. And at the pace we're going, a lot of these third world countries are going to be completely bankrupt in very short
Why can't all of them just adopt the dollar?
I mean, they could all peg to the dollar, I guess, but I can't even think. I mean, they want some degree of sovereignty, these countries. And again, look, who has more debt than any country in the world, than pretty much all the countries combined? Us. And we're growing it parabolically, and we've lost our manufacturing base, and we're becoming the pariah of the world. And we got all these new politicians in there that want trade wars and currency wars and deficit explosion. Now, this isn't going to last 10 or 20 years. I've simply said from the beginning, the dollar is the top of the totem pole. It's just the last to go. It doesn't mean its purchasing power is going up against real items of value, unless they're manipulated like gold. It means it's going up against the other fiat toilet paper, which billions of people are watching their worlds collapse right now as a result, including Europe. Why do you think they're having all these currencies?
Andy, I totally agree with you. I mean, I've been bearish on the euro forever. I called the Greek banking crisis within like 6 months of it happening, but after it happened, I called the Italian banking crisis, and I'm like a year and a half behind on it, right? I mean, it's just not happening. These things always take way longer than we expect them to.
Oh, they could. No, I mean, I'm not, but to say 10 or 20 years from now, we're going to still like, oh, Trump is going to make things better. Oh, Bush Jr. or Chelsea Clinton or Ivanka Trump is going to come in and make things better. I mean, there's a lot of stuff that's been going on in the world right now that is at the end game. I mean, we're talking about when the finances are crashing, I mean, how much longer can you go with it? So, what would I do? There is no solution. The solution is to be aware of what's going on.
But we've heard about it for a long time. I don't like to pick on Doug Casey. I really like Doug Casey, but I've been picking on him in some of my tweets and stuff because I found some of his writings from 1981 where he calls for an imminent hyperinflation of the US dollar by 1983. And it's been 30 plus years, and it still hasn't happened.
Yes. Well, look, I'm not selling a newsletter. Yes, you could say I'm compromised because I sell precious metals. But look, I've been talking about this stuff for 14 years. I've been in this business for 5 years. And again, people listen to me and read me because they know that I'm telling the truth. Look, I've never called for an imminent hyperinflation. But pretty much anyone who's read what I've said would be shocked at how dead on I've been about the macroeconomic changes, the things that I can't take advantage. I can't understand how the timing is the manipulation. I mean, if they're going to go to negative interest rates or the ECB is going to monetize every single bond and stock in the universe, how long will that add? I mean, you're still seeing the purchasing power go down and the economy's going down and the political revolutions. So look, I don't know how long it will be. I'm just telling people, prepare. That's all. Be ready because, it could be tomorrow. It could be 3 years from now. I don't know.
Okay, so let's say they are ready. Let's say people have some gold and we get this monetary implosion and you have gold. How do you see gold being useful let's give it 5 years, right? Let's say hypothetically the dollar, the euro collapses next year or in 2 years. Other currencies are all over the place. China, I guess, is the wild card. And the U.S. is having major problems. Trump is being voted out. Some socialist is getting in, which worries me, by the way. I mean, I'm also looking for a major U.S. economy crisis. And in a way, I was kind of hoping it would happen on Hillary's watch. It would be unfortunate if it happened on Trump's watch, though we both know that this is like 30 years in the making. It's not going to be Trump's fault. If it happens in like 2 years. You agree with me there?
Of course. And right. I wanted Hillary, I did everything I could to make sure she was not elected because, I mean, she represented the end game right now. I mean, it could have been one person that could have done it, and she could have easily done it.
I agree with you, but I agree with you. But if Hillary would have caused the end game, then this could have been the end of Democrats and socialists. Right? If the end game is inevitable and it happens on Trump's watch, we could be in for major problems for the next 50 years because now the socialists are going to take over. So that does worry me a little bit as to play devil's advocate as to why maybe Hillary winning wouldn't be such a bad thing after I'm dead.
The demographics guarantee that the socialists are going to gain power as they do every time there's a societal or economic collapse. And, in this case, on top of that, you have this technological phenomenon we're talking about. So you have too many people, less jobs and less money and a fiat crash. So again, it could be, there's so many things like what if Marine Le Pen, and believe me, I said that the Brexit would happen. I said Trump would win. And I'm saying that Marine Le Pen's going to win. If Marine Le Pen wins and says, I want to Frexit, what happens? But when you're saying what happens with gold, nothing happens with gold. Right. It's the same thing. It sits like it did for thousands of years. It becomes more valuable in fiat terms.
All right, but just because your gold is more valuable, like how do you foresee the future? Like you have gold. Okay, fine. We have a monetary collapse. Your gold becomes valuable. Now what?
You hold it. It'll become more liquid, that's for sure. It doesn't even have to be a worst case scenario. I'm not one of these guys who's saying it's going to be the hyperinflation and everyone's going to kill each other. And at that point, who cares if you have gold? It's going to be the least of your problems. I'm just saying, assuming you have civility in society, you're going to be a much wealthier person in purchasing power terms. And you have to be careful how you hold it and where you hold it. Again, there's not many things throughout history that have preserved value. People go, you should buy real estate. Well, right now, real estate is massively overvalued and it's much less liquid than gold. So.
Yeah, but real estate is like always overvalued, right? Just like stocks. Well, stocks are overvalued.
Not in 2008, it wasn't overvalued.
It was 1 year. I'm an idiot too. Like in 2010, I went down to Miami. I was looking at condos for like $35,000, $40,000, and I didn't buy them. And now they're like $250,000. down on South Beach. So I made my mistakes too. I was right there. I was looking at them. But so you really think that gold would do better in that environment than say Apple or Netflix? I mean, these companies aren't going anywhere. They'll just revalue in whatever the next world reserve currency is.
Well, first of
all, they'll always be overvalued.
Well, first of all, who said that you can't make profits in multiple assets? I didn't say gold's the only thing that'll be worth something. But that said, it's a fallacy that stocks do well during inflation. They do well in nominal terms. They do really well when the PPT is there holding them up every day. But I mean, the perfect example is Weimar Germany or Zimbabwe or Venezuela last year. Venezuela last year had the best performing stock market on the planet. So in nominal terms, yeah, I guess if you own stocks, you did well. But in real terms, you got crushed. And Weimar Germany is also a perfect example. The CPI went up. The stocks went up, but the CPI went up much more. And gold went up much more than that. And that's what would happen in a free market. But again, look, I'm not talking about Apple. And again, there's a difference between the worst case scenario and simply an inflationary environment where you could pass along costs. I mean, if you have a true hyperinflation, people don't have any money to spend on anything, let alone iPhones. So I'm just talking about if you're not talking about a worst case scenario and is this inflation, well, there are going to be companies that have the ability to pass it along, but much fewer companies will be able to pass it along with the higher that inflation goes up. And the same thing goes with homes. I mean, homes, first of all, they're extremely illiquid. Most of them are owned with debt that's hard to pay back. And anytime you've had inflation, governments have adjusted property taxes and mortgages for inflation. So there's no real way to win. Historically, gold and silver have been the most liquid assets with no debt attached to them, and they've worked. But until now, I have not literally seen a single asset on the planet that I thought had any kind of characteristics like that until Bitcoin arrived, which not only has those qualities, but they actually can be used for day-to-day transactions if it ever scales and all that stuff.
All right, so let's jump onto Bitcoin. Though,
yes.
In my experience, people always seem to find the money for an iPhone, no matter what car they're driving or how they're living. They always seem to find a way to buy an iPhone.
For now, they do. But by the way, look at the prices of iPhones just in the UK. Like after they had the Brexit and the pound dropped. And by the way, gold went to an all-time high in pounds, and the pound basket dropped to an all-time low in the history of the UK.
Yeah, I think the pound is way oversold. I think them getting out of the euro is like the best thing they can possibly do.
Of course, it's good for them and it's bad for Europe. But the point is that the purchasing power in Britain plunged then, and gold went up, and iPhone prices saw the numbers. They went up like 30%.
Well, I agree, but that's because Apple is an American company and not a British company,
right?
Right. So
that's right. It's inflation.
If the iPhone was invented by a British Steve Jobs, then they would not have been affected by the price of an iPhone, but it suddenly would have been cheaper for all us Americans.
Right. But look, in Britain, the Brexit crash only lasted for a few months, and the people still got their credit. But believe me, they're hurting. The debt levels in Britain have soared, and the falling pound has only made it worse. And we're talking about this is the beginning. I mean, there's going to be currencies are going to keep falling, and this currency is a lot weaker than the pound, where the people literally will not be able to afford iPhones. But eventually, the inflation will get. I mean, look at the inflation numbers the last few weeks here, in China, in Germany. I mean, what do you think that the ECB is going to? What happens if the ECB stops monetizing tomorrow? Whole Europe crashes. So they'll keep doing it.
I agree. All right, so let's conclude with Bitcoin. And yes. I know you've been fascinated with Bitcoin, like I have been in the last few years, and you've been talking about it more. So how do you foresee similar style manipulation entering the Bitcoin market? Because as you know, we already have derivatives. The Winklevoss twins are trying to get an ETF. I mean, it's a repeat of the gold market, right? Only it's happening a lot faster because Bitcoin is a lot faster. Do you see the Bitcoin market headed into the same direction as the gold market did 30, 40 years ago?
Oh, what a great question. I wish I knew. Look, right now,
it's much harder to manipulate Bitcoin. In fact, the Chinese, for whatever their motivation was, you couldn't have a better outcome than them getting rid of those stupid free trades in the margin. The less margin, the better,
right? And the less of these HFT traders, especially ones paying nothing and painting the tape, the better. But what will the governments be able to successfully create this massive derivatives phenomenon which suppresses the price? I just don't know. The thing with Bitcoin is that because it's so decentralized, I just kind of feel that it's going to be harder for like gold is so easy to manipulate because you have to put gold on exchanges and you have to move the gold around. But Bitcoin, if they didn't have exchanges, I think people, the technology, people will create ways that they can exchange it. And I don't think governments are really, they're so dumb and they're so backward thinking. I don't think they really understand what they're getting into. That's why I think Bitcoin is great for gold, because I think they're going to start fighting it like Don Quixote and not realize how difficult it is to hold it down. But I think the world is going to change for the better in that matter. I think that Bitcoin is going to be such a powerful force as time goes by that governments, no matter what they try, are going to have trouble manipulating the price
but here's the thing, right? Yeah. I mean, it wasn't the governments that created futures contracts on Bitcoin. It was the free market. And in fact, it's the governments that came in and lowered the leverage on Bitcoin. And it's the governments that came into the Chinese exchanges and forced them to put in fees to stop this, insane fake volume. So as far as I'm concerned, the government is actually helping stabilize Bitcoin, which is good. Of course, I always said this is where the good stuff ends and the bad stuff is about to start because they're about to KYC up the yin yang. And on top of that, I'm worried that the Chinese might confiscate Bitcoin from foreign holders because no one can stop them. And the U.S. government isn't going to do anything about it. Why would they?
Well, yes. I mean, and they could say, well, India just put out that press release saying, hey, buy your own risk, because, of course, look, they're scared of everything. Their whole society's falling apart. They could say, yeah, we're going to ban gold. We're going to ban Bitcoin. And, China's worried about the capital outflows. Oh, they might ban Bitcoin. The thing is, yeah, they're going to try everything. They've tried everything with gold, and look what they've done. They've created this monstrosity of a fiat Ponzi scheme, which is destroying the world. And, by the way, they've caused gold and silver demand to soar and supply to fall. Bitcoin is such a brand new thing to them that, yeah, I mean, first of all, I can't believe that they would allow these ETFs around, because all that's going to do is bring more demand. I don't think they're really thinking, well, if we have it, we can naked short it and hold it down. I mean, this is going to be a truly global economy, and there's going to be a lot of decentralized places coming in. So, again, this is all new. I mean, there's going to be attempts to hold it down. There's no doubt.
I know I got plenty of content saying how dumb the ETF in the Bitcoin ETF initiatives are. I think it's completely insane. Not to mention, it does help centralize Bitcoin along with other reasons. So those watching, just Google me and the Bitcoin ETF on my blog. Lots of content. I might do an episode of CryptoScam on the Bitcoin ETF. Probably should do it before the
Well, it's kind of like GLD and SLV. A lot of people think they were created by the government to enable them to naked short gold and silver, which they have very successfully since they came out. But is that truly why that they came out? Is Bitcoin going to be the same? Could they possibly even have the same amount of Bitcoin in that ETF as they supposedly have in the gold? Look, the GLD, it says that they can encumber it and not even tell you about it. I mean, it's such a trap.
Yeah, I've been trying to find out how much gold is actually there backing GLD, and I haven't been successfully able to get that number.
Well, that number is available. The problem is that it's not audited. It's not required in the prospectus to be audited.
I've had problems even getting that number. I know the auditing is going to be an issue. So if you happen to run across the number that is supposedly backing it, if you can shoot that over to me like in a message, that'd be great.
Yeah, there's a guy Nick Laird at ShareLinks, LYNX, and he has all those charts. I'm not sure where he gets it, but it's real numbers. The problem is it's not required by the prospectus to be audited, so we have no idea. Plus, it could be encumbered, so we don't know how much. It's like Fort Knox. How much gold is there, and how much do we own?
The Bitcoin and the Bitcoin ETF hopefully will be easier to audit, but it's also way easier to steal. But that's one of the reasons why I'm not a big fan of it. All right, so let's stick with Bitcoin and let's talk about China. I heard you say something very interesting that I listened to your last audio podcast, and I will quote where you say, Yuan unexpectedly devalued to a fresh 3-month low last night. And you said this February 8th. And I don't remember them actually devaluing. And right now I'm pulling up the chart of the Yuan, and here's their 1 week, and it looks fairly stable. But when I zoom out on the value of the Yuan to 10 years, this doesn't seem to personally bother me at all. In 10 years, it's moved from about 7.5 Yuan to the US dollar to 6. So it's in a fairly tight range. And I have one more graphic to show you. This is where everybody went nuts. You know, China devalues, and they devalued, and I took this image towards the end of 2016, where everyone went crazy. China's been devaluating. Chinese yuan's been down 10%. During that same time, the euro was down like 25%. And China was literally back to where it was in 2008, while the euro was down 35 to 40% since 2008. And then China unexpectedly increased the value of the yuan last month, which threw Bitcoin through a loop, and I have reasons as to why that is. It wasn't even the fact that the Chinese went the opposite side on their currency. It was also the fact that they increased the borrowing rate, and then people had to pay back the borrowing loans, and that kind of caused problems with Bitcoin, and it was also a surprise to the market. One more thing I would add before I let you address all of it is there are numerous analysts that are not only predicting but suggesting that China is going to stop devaluating the yuan because they don't want any more capital flight. So they're actually going to try and keep it as stable as possible, or perhaps even increase its value to prevent capital flight, and that makes sense. And at the same time, I don't blame China for any of it. The Fed is manipulating things for the whole world. They're just trying to do what's best for their population. Right. So I'll let you comment on all that. I don't know where you want to start. I know
okay, we'll go back to the chart, the very simple chart of the yuan, 2 or 3 back.
My chart, this one?
No, 2 more.
Or the
2
other
more.
one?
2 more.
Okay, got it.
No, after the gold.
Here we go.
That one. Okay. Now, first of all, what I was talking about the other day when you're talking about that quote, I was saying it was pretty amazing that it was last week, you know, they do their daily fix. And for a daily fix, it wasn't a, quote, devaluation. It was, 2 basis points in one day is quite a big deal for them, particularly because the dollar was actually falling at the time. Typically, they only...
Oh, no, wait. This would have been right here?
Let's see. I'm looking at...
it would have been...
something like that.
Like over here, on the 8th.
Yeah, and they, typically they only devalue when the dollar is rising because they're trying to get down their cost of exports, and it did cause a stir when that occurred. But that's just a day-to-day thing. Look, if you go back to the chart, that one right there. From 2008, right at the time of the financial crisis, it flatlines because that's when before 2008, it wasn't even really an open economy at all. Those numbers are meaningless because there was like no convertibility of the yuan for anybody. And in 2008, that's when they pegged it during the financial crisis. They said it's going to be 6.6, I think it was. So it was a pretty big deal when just a few months ago, they went above 6.6. And so now we're in uncharted waters in the free trading yuan world, or as free as it's ever been. And then you, of course, have that 7.0 number, which is such a key psychological level. And remember, it got to 6.99 about a month ago, and that's when Bitcoin exploded, and the government's going, no, it didn't really go to 7, where you trust us and all this, and that's when you had the maximal capital outflows because the offshore yuan speculators were going, they're really going to take it down big. They're going to let it go over 7. They were only going to let it go over 7 if the dollar starts to take off. And that's why Janet Yellen is on this hot seat of trying to pretend, oh, the economy's great and we're going to raise rates 3 times, just like we were going to raise them 4 times this year. When rates going up is destroying the world. Not to mention when you have Donald Trump coming out saying we need a weak dollar because it's killing us. So, something's going to give on that front. But again, if you go back to last year in April, I wrote an article called "The Worst Economic Data I've Ever Seen," and it was talking about the Chinese exports collapsing. April 2015. I said, they're going to have a big devaluation coming because their economy is the biggest bubble in history. And then when I saw the July numbers in the middle of August, I said, this is crazy. They're going to devalue. I wrote an article called "The Upcoming Cataclysmic Financial Big Bang to End All Big Bangs." It was like August 15th, saying they are about to do a big devaluation. And sure enough, less than 24 hours after I published it, they started. And they did the cataclysm is not what they did. They did 6 or 8%. But it certainly had an impact on the markets, and it's caused all these trade wars to start. And then they did another 7 or 8% this year. So we're down to, 10 or 15%, which is having a major impact on global trade. It's hurting it. And eventually, if the dollar gets any stronger against other currencies and they're going to continue to be pegged to it, they're just going to destroy their already dying economy even further and pop their bubble. So you bet they're going to do a major devaluation. And that's why you have this game. Trust me, if the dollar goes over, let's pick a number, 102. And again, it's tough there's so many things going on. I mean, what if Europe collapses? That yes, the dollar index is mostly euros. But I'm not talking about that. I'm talking about if you have a crisis and people are worried or they think the Fed is going to raise rates when everyone else is going to keep. I mean, the Chinese are going to devalue. Anyone who says they're going to appreciate is an idiot. I mean, they're crazy. They have the biggest bubble in history. They have more debt than anybody. I just read today they created $540 billion of new debt, most of it in the shadow financing world, just last month alone. So no, they are not going to appreciate it. The yuan is massively overvalued because it's been pegged to the dollar, which is being taken up by liquidity flows. The dollar itself on purchasing power parity terms, the Big Mac index, you name it, is the most overvalued it's ever been in history. But I still think it's going to go higher because I expect crisis and I expect a lot of liquidity to flow into the dollar from the rest of the world, which is going to push the Chinese hand to need to devalue further.
So this is interesting. So you really think the Chinese are going to devalue? I know Jim Rickards is big on that, and a few people were like emailing me his January 19th big prediction that they're imminently going to devalue. And I remember tweeting it out just as I heard it. I'm like, no, that's not going to happen. I didn't expect it. It's interesting because for the prior few years, all I heard from pundits, and economists is that China needs to free float their currency. It's too cheap. It's going to appreciate in the market to drop the US dollar. The Chinese are artificially keeping it low. But yet you think the Chinese yuan is overvalued.
Yes, because it's not freely floating. It's pegged to the dollar, which is the most overvalued currency in history because of all the liquidity flowing into it. Again, you look at purchasing power parity around the world, it's not even close. The dollar is by far the most overvalued currency because of safe haven flows into it, and they are tying themselves to it.
I don't think that. I think if anything, the U.S. dollar is undervalued, not overvalued, because everyone wants the U.S. dollar.
But I'm talking about purchasing power parity. I'm not talking about safe haven, which is why it's going up so much.
Right, I agree.
And that drags up the yuan, which kills their export industry, which is already dying. Remember, their bubble, they have 30 trillion of debt, and all the shadow
actually, no, wait. No, I'm sorry. I don't agree there. It's the opposite, right? If the U.S. dollar is going up, the Chinese yuan would go down naturally, therefore making their exports, this is just
it pulls it up. It's pegged to the dollar. It gets stronger as the dollar gets stronger, and that's what they don't want. So when the dollar,
they don't want exactly. So they want to. I wish they would free float their currency. I mean, they can do whatever they want. They're China. They're doing what's best for their economy. But this is the issue. If they free floated, if they stopped, announcing what the exchange rate is, if they let it truly free float, I have no idea which way it would go naturally, right? Is it overvalued? Is it undervalued? I don't know. Some people think it would go up in value because it's undervalued, and some people think it would drop in value And I think if the Chinese felt that it would drop in value, it could be bad, it could be good, because if it starts to drop in value, they have a lot more capital flight, yet at the same time, their exports become cheaper, which is good for them.
Look at
They're
all
just
the
trying to keep a balance.
Look at all the capital flight now. I mean, I've called them the most dangerous destabilizing force on earth because they are trying to devalue the currency and at the same time prevent it from falling too fast. The offshore market is telling you that the currency is way overvalued. It wants to take it lower, but every time it tries to, then they come in with capital controls. And that's a big reason why Bitcoin has gotten so big and why, of course, you have such a big gold demand over there, which the government approves of, fortunately. Look, they're not going to free float the currency, but if they're forced by a rising dollar, or if they're forced by an antagonistic Donald Trump imposing crazy trade tariffs and border adjustment taxes, they will severely devalue the yuan. They're not going to let it freely float, but they could come in one day and say, it's not 6.9 today, it's 8. And that will be massively deflationary for the rest of the world, and it'll cause bigger currency and trade wars. Believe me, in the big picture, like if you talk about down the road, of course China's currency, assuming that the fiat currency system exists, is going to be worth more because they have all the manufacturing, they have all the gold. Probably they have more Bitcoin than any other country, and I wouldn't be surprised if the government actually owns some. But right now, they're in the middle of a bubble even bigger than ours, and the people in government have 1.5 billion people to feed, and they're not going to if they let anything go, it's kind of like, if Donald Trump said, I'm going to drain the swamp and actually did it, everything would fall apart. Or if the Fed stopped monetizing, or the ECB or the PBOC, just let the yuan float. Right now, they're all playing tap dancing so they can all remain in power and avoid the inevitable imminently. But ultimately, China's got to pop. And in the big picture, when we look down 20 years from now, China's going to be a far bigger power in the world than the United States is.
Yeah, no, and I actually agree with you there. All right, on that note, we should probably leave it here. Thank you very much, Andy, for joining me on this podcast. I hope this was a good episode for everyone. This will be out on SoundCloud as well. And all of the links that we talked about, I will try and put them into the description. Go ahead and why don't you tell people where they can find your work and how they can reach out if they need to.
Right. And again, I want to thank you too. I have a great deal of respect for what you're doing. You're a great communicator in one of probably the biggest growth industry of our lifetimes. As for me, I'm going to try to follow all the monetary trends as well as I can and maintain my expertise in precious metals, being that I'm the marketing director of Miles Franklin, which is one of the oldest, most trusted bullion dealers in America. And it's also my biggest personal position. The second would be Bitcoin now. I write every day and do podcasts like this for free every day at milesfranklin.com. You can call us at 800-822-8080, or you can email me at ahoffman@milesfranklin.com.
All right. Thank you very much. I am, of course, Tone Vace. You're listening to this podcast, so you know about the CryptoScam. This was slightly different than our usual episodes. So let us know if you like it. Like, subscribe, thumbs up, thumbs down. You can also catch my blog, libertylifetrail.com. I'm fairly active on Twitter as Tone Vace. And you can also catch me talking Bitcoin news on the World Crypto Network on the show, the Bitcoin Group. All right. Thank you very much. And I'll see everyone on the next episode.